Good morning, guys. I want to talk a minute about insurance costs. So, as you know, we do consulting for other companies and individuals who are setting up their own trucking company. Some people want to lease on to a third party, and some want to start their own DOT, get their own MC carrier number, have their own authority to move about the country. And there are pros and cons to both. But for people who are trying to set up a DOT, an MC number, and own their own authority, the insurance looks a little bit different, right? So I want to just talk about that today, give you some clarity. First of all, if you're brand new DOT, then and again, I'm talking to investors, right? This may or may not apply to you as much if you're an owner operator. I'm talking to investors. Investors, a person who's not driving the truck, but they have a couple of trucks on the road and they're paying drivers and they're running an entity as an investor, right? I'm talking to you. So you're setting up MC and DOT and MC. Now you have to put insurance on your DOT in order to activate your MC, your motor carrier number, right? You have to put insurance on that in order for your motor carrier number to be active. Otherwise, you're just a DOT, you're a number, you're an account with the federal government. So once you spend that $300 and get your motor carrier number, now you gotta activate that with some sort of insurance. Typically, the FMCSA will say, hey, you know what, you can put the basic insurance, what is that, it's public liability insurance. They'll say, hey, just put the public liability insurance. And you can do that because it's less money down if you call Progressive or whatever. But when you come back now to add on a cargo liability and any other lines of insurance, now Progressive was like, hey, what are you doing? Okay, we're going to charge you more for that, right? So your down payment on your insurance can be more if you do it in pieces in that manner. Number one. And number two, the insurance company is going to want to have a driver's license of the person who's going to be driving your truck. So you're not actually ready for that, you're not ready for that yet, typically. Like when you're first getting insurance, you haven't done the pre-hiring yet, not usually. So that can throw you off. So if you don't have a driver's license of a CDL person you're going to hire, then now how do you scramble to do that in order to get your insurance to begin with? So that can be a little bit of a conundrum. And as an investor, you have to know how to get around that. Can't say it on this video. But you have to have a CDL in most cases as a new motor carrier. The insurance companies want to see, okay, who's driving this truck? Who's driving your trucks? Let's run their background. Let's get their MVR or whatever to see that these are insurable drivers. And if they have some points or whatever, your insurance is going to reflect that. Okay, so that's important to know that going in. Sometimes people find out once they're already in it. So that's another piece that affects your insurance, particularly as a new DOT, MC, as a new truck authority. And then of course, the other big element is where your truck authority is domiciled in, what state, right? Because your rates will be different if you're in Iowa versus if you're in New Jersey, right? The rates are different based on population. So the insurance rates particularly, I think it's also in automobiles, like consumer passenger vehicles, but more particularly in the commercial markets, the insurance rates are based on the population in that state. That's the starting point for your insurance. So if you're in a city or a state that has a higher concentration of people, then you can expect to pay more if your truck company is domiciled in that state. All right, so those are three issues that can really, affect your insurance, particularly if you're a new DOT starting out, a new truck authority, and you want to get some clarity on that. I'm glad this video hopefully will help you. And one good thing is that as you go forward in time without any accidents and things like that, then your insurance will drop down. After the first 6 months to a year, you can start to see some decreases in your insurance. Let's make money.